and these books are worth $25, but they will be given to you free of charge, and I'll give additional books if you are able to join my forex trading class. You're welcome. Have an amazing time. So today we'll be learning about candlesticks and candlestick patterns, right? So of course, candlestick is used in financial analysis. The tools that are used there depicts daily price movements. So the candles show graphically daily price movements. So if you want to make profits like this, right, to be in $75,000 profit with an $11,000 account, you first have to gain the knowledge, and the knowledge begins with understanding what candlesticks are. Right, so what type of candlesticks are we going to be studying? We are going to be studying candlesticks patterns, right? What type of candlestick patterns? The Japanese candlestick patterns is what we are going to be studying here in this particular video. So I need all your attention, I need your concentration, I need you to focus so you can have a better understanding of what we are going to talk about. So candlesticks are in both ways, right? We have what? The bearish, and then we have the bullish, right? It's not about the colors, right? It's not about red, it's not about green. Don't focus on the colors, focus on the body of the candle, right? But mostly it is interpreted as red and that of green, right? So it's a battle. So as you can see in this candle, right, every candle has an opening price. You can take a screenshot here. For the bearish candle, that's those for the sellers, right? Price opens where? At the top, right? Price opens at the top and closes at the bottom, right? For the bullish, those that go into buy, the buyers, right, which normally you see as green candle, but don't focus on the candle, focus on the body. Price opens at the bottom and then it goes up, meaning the buyers starts at the bottom and then it shoots up, right? Whilst the sellers, it starts at the top, price opens at the top and then goes at the bottom. So as you know, candlestick has wicks. This long line that you see, right, the long line at the top of the long line, right, is the long line is what we call a wick. At the top of the long line is the highest price, right, and towards the bottom of the long line you can see is the upper shadow, right? At the bottom of the long line you can see the lowest price, right, and the shadow. So that's for the sellers. Now for the bearish, the sellers. Now for the bullish, you can see the opening price, right, it starts at the bottom, right, and then the closing price, it starts at the top, right, it ends at the top. So both has wicks, right? So here is the bearish candle. The highest price, the wick, as you can see, this long line that you see on the red candle, right, at the top is the highest price, meaning is the highest price the sellers went for that day, right? It's a reflection of the highest price that the sellers went. So if you see low here of the week, you can see that is the lowest price that the sellers went for that day, right? So remember, for the sellers, it opens at the top and then it comes down, right? Every time there is a sell, it goes down. So it has to open, price has to start at the top, right, and then goes down, right? For the bullish, which is the buyers, price has to open from where? The bottom, and then it goes up because people are buying and then it's going up. So it closes at the top, but there is always a wick. Sometimes there is a wick, sometimes there is not a wick. That's that long line that you see on the candle, right? It shows that the highest point that the price went to, right? The long line doesn't have a body because it went to the highest price and then came back down. The sellers brought it down and then it closed at a certain price that you can see there. Stay with me, don't move away, right? So we have candlestick basics, that's the bullish candles. So this one, the first one that you see, it has no wick, right? So every time you see a candlestick like this, right, it has no wick. So know that it's mostly bullish, it's pure bullish, right? Then you have the second candle, right? it has a wick, a very long wick, meaning what happened, it opened at the bottom, it went all the way up, and then the sellers brought it down again, right? And then the buyers sent it up, and then it closed at this point where that long line starts. And then we have normal bullish, right? Normal bullish, you see a small candle wick at the top, and then a small candle wick at the bottom, right? And then we have neutral bullish, and then we have least bullish. So you see, this is the candlestick also here that you can see reflected, right? You can see this is the bullish candle. Remember, for bullish, that's for the buyers, it always opens at the bottom, right? At the bottom, right? And then it shoots up. It goes up, meaning when people are buying, the price has to go up. It doesn't have to come down, it goes up. This is now the bearish. That's the opposite of the bullish. That's the opposite of the buyers. You know, in forex we have buyers and then we have sellers, right? The bearish is the one that has to do with those that are selling. So when people are selling, price opens at the top, right? When people are buying, price opens at the bottom. Price opens at the top and comes all the way down. So we have types of candlesticks. We have bullish candlesticks, we have neutral candlesticks, and then we have bearish candlesticks, right? So as you can see the patterns here, for bullish candlesticks, we have a long bar candle, we have the hammer, we have the dragonfly doji that you see very small like that. And every one of them has a history. If you want to learn a lot deeper, please subscribe to this channel, turn on the notification bell, and leave a comment that you want to learn. I could teach you for free, absolutely free, right? So we have the neutral candle. These are candles that are indecisions. When you see them on your chart, right, just know that nobody's winning. The buyers have not taken control of the market, the sellers have not taken control. So this is a dragonfly. You see it's like a cross, sign of the cross in Christianity, right? So it has the high, it has the low, it has the open and the close at the same point. It shows that it's neutral, right? It's like going into a shop, right? You do not buy, you do not sell when you are inside the shop. Maybe meaning you are neutral. You are not buying, you are inside the shop. You are inside the market, right? It's showing that buyers and sellers are inside the market, but they are not buying, they are not selling. It's neutral, right? So how to read candlesticks is very important. First, the upper wick, that long line that you see is very important. It shows that it's the highest points the price went, or the lowest point, right? So you have to understand. And next, you have to understand the open and the close price. Now, let's look at the bearish inside bar. It's a pattern with a small bearish candle inside. The prior larger bullish one signaling a potential reversal, right? So bearish inside bar shows that this is one of the most complicated candlesticks that you can ever learn about. It's not about the colors. First, you see a big candle, right? That is bullish, right? And second, you see a small candle that is bearish, right? To show you that there is going to be a reversal, meaning the market has been going up to all the way up, right? And then you see a big bearish candle, and then you see a small one is about to be a reversal. And next is the Marubozu candle, right? Marubozu candle is a candlestick with no shadow. It does not have that candle wick, that long line. It shows you that this candle, if it's red, right? If it's red or is green, is to show you that there is high sales. If it's red, and it is a point that you can back on and enter the trade and make money, right? If it's green, or it's an uptrend, for example, the candles are going up. Remember, when it's going up, people are buying. When it's coming down, people are selling. It shows that there is high sales. Another is twizy tops. or you can call it twin tops, right? It's a bearish reversal pattern that is formed by two candlesticks with almost identical highs, suggesting a potential trend reversal. What is a trend? A trend is when you see the forex market, right? You slant your phone horizontally or your laptop. You can see that you see your laptop. You can see that if the market is going up, and then you see this kind of candlesticks almost the same, about the same height, just know that the market is about to go down. Another one is the piercing pattern, right? The piercing pattern is a bearish reversal pattern that follows a bullish trend and consists of two candles indicating a potential trend reversal from bullish to bearish. So you can see the market going up, and then you see this piercing pattern candlesticks that forms. One is higher than the other, and you can see there is a reversal, right? We have the bearish engulfing bar, a bearish reversal pattern where a small bullish candle is followed by a large bearish candle, right? So to tell you that the market is about to reverse, when you see this particular kind of candle, first you see a small candle, right? And then you see another candle that is a lot bigger. Another one is the evening star, right? Please take screenshots and please study these things. I have all that in my books, right? I am Dr. Pips, and then if you check my books that I will be sending to you, you will learn all these things and it will be very easy for you to understand. Please. Evening star is a bearish reversal pattern with three candles that indicates a potential trend reversal from bullish to bearish. We have three black crows. You will normally see these ones. It's a bearish reversal pattern consisting of three consecutive long bearish candles indicating strong selling pressure. When you see this, just know that the sellers are in control, that people are buying. It's like a team of sellers and buyers. People are buying, are selling, sorry. Okay, next we have the shooting star, right? A bearish reversal pattern with a small body, a long upper shadow, that's a wick, right? And a short lower shadow, suggesting a potential trend reversal from bullish to bearish. So you see the market going up, and then you see this candle, right, form, right? You see a long wick all the way and a small body at the bottom. Just know that the sellers are about to take control, right? So we have the bullish tree, the bullish tree star, right? This is a buy candle. You see a bearish candle form, a red candle, bigger one, and then you see small green candles forming. Just know that the buyers are about to take control and there is about to be a huge buying step that is about to be taken. So please take screenshots so you can learn more. Another one is an evening star, right? First candle that you see in an evening star, you see a bullish candle. Next you see a small bearish candle, that's a seller's candle, and you see a big candle that is a seller's candle. Just know that there is about to be selling, right? The candles will be going up, that's the buyers are in control, and then you will see these ones. Suddenly you see a buyer's candle, right, which is a big candle. Buyer, BUYER, right? And then you see that small candle, and then you see another one that is also a bearish. Next we have the hanging man. When you see this one, you see candles going all the way up, green candles going all the way up, and then you see this candle form, right? You should know the psychologies behind these candles, right? What happened here is the buyers, the market opened and the buyers took the candle all the way up, right? And then the sellers took it all the way down again, right? And then it's closed here where you see this big body. I will teach you more when you join my class. Please, I want you to learn this. It's very easy to learn. Another one is the shooting star. The shooting star, when you see candles going all the way up, you see the shooting star, right? The shooting star will have the longest wick and the smallest body. the body will be small, just as you see here, and then this wick will be longer than all other ones. Just know the sellers are about to take control. We have the bullish engulfing candle, right, which is a signal to buy. You see the candles coming all the way down, red candles. Everybody is selling, and then you will see a small red candle or a small candle that you see, right, which is a seller's candle, and then you see a large candle which is a buyer's candle, to tell you there is about to be a trend reversal. So we have different trends in the forex market, right? We have downtrend, uptrend. For now, let's deal with those ones, right? So we have the inverted hammer, right? So you see candles going all the way down, and you see this inverted hammer just looking like the other candles that you saw. This is to show you that if the trend is a downtrend, which is a seller's trend, right, and then you see this candle form, right, is to tell you that the buyers are about to take control. And next you see the hammer, right? The hammer is also a buyer's candle, right? It tells you that the trend is about to reverse. You see the sellers taking control, and it's a downtrend, and suddenly you see this hammer form. And when this hammer forms, you know that this is to signal to you that there is about to be a reversal. Please, let's learn the psychologies, right? So the tops and the bottoms candle patterns. So for bullish, you have engulfing bar, you have the hammer, you have the piercing, where you have the harami, right? For bearish, you have engulfing, you have the shooting star, you have the dark cloud, you have the harami, right? The harami in the bearish, in the bullish, is different from the one in the bearish. So types of doji, these are indecisions, meaning the sellers are not in control, the buyers are not in control. We have the classic one, which looks like a cross. We have the log leg, which is very long, right? We have the dragonfly, right? And we have the four price, which is just like a neutrality sign. And we have the gravestone, right? Or gravestone doji, right? Which is an inverted cross. Remember, the dragonfly is a cross that is standing this way, and the gravestone is the one that is turning invertedly. Please take screenshots, right? So as you can see here, we have the large body wick, right, and another large body wick for the bearish, which is to give an understanding. Look at this chart by the right? You can see it here. If you see a large body wick, just know that buyers are in strong control. If you see there is an uptrend, right, you see the three candles at the bottom, right? If you see an uptrend and suddenly you see this candlestick form wherein the wick is red and very long, just know the sellers are in control, right? So you can see this one, right? Big green body where the body is bigger than the wick, right? The body is bigger than the wick. Just know the buyers are in control. Sellers are in control. Big red candle where the body is bigger than what? The wick. Just know the sellers are in control. These are simple things that you have to know. It's not about the color, it's about the psychology behind the formation of the candle, right? All this can be seen in my book, and it's free. It's absolutely